Hello guys, welcome back to the channel. So today we're going to be talking about buy or sell, what you need to know and why it is called long or short. Okay, so we're going to be explaining all of that. Now this is what we'll be covering in this video. We're going to be covering the true meaning of buy, which is long, and sell, which means short. Now we're going to be covering how forex traders make money in any market direction. We're going to be talking about common beginners mistake and the psychology behind buying and selling. So stay tuned. Remember to subscribe if you've not already subscribed to the channel, and click the like button. Give this video a thumbs up. Let's get started. So what trading really is, now at its core, trading is simply the exchange of value. In the forex market, you are always dealing with currency pairs. I did a video extensively on currency pair, so if you don't know what a currency pair is, do well to check out that video. Okay, now it means you are buying one currency while selling another. So in the forex market, you are trading something, and currencies are what you trade, and they come in pair. So and every single trade you take boils down to two things. So you're either buying, which means you go long, or you're selling, which means you go short. That's it. There are no third options. But understanding what this actually means is where most beginners get it wrong. Now, what is a buy or a long position? When you buy, you are going long. This means you believe the price will go up. So you enter the market at a lower price and you aim to exit at a higher price. So for example, if you buy Euro USD at 1.1000 and the price goes up to 1.1050, you've made a profit. Okay, so the simple rule is like you buy low and you sell high. It's just the way it applies to our everyday life. Let's say you're selling crates of eggs and you buy it for 1,000 naira for one crate, and you sell at 1,200 or 1,300 or even as high as 1,500, depending on the demand for that crate of egg, right? That means you made profit. So you bought at 1,000, which is the low or the dip, and then you sell high. Okay, so that is what a buy is. Then what is a sell or a short position? Now here's where most beginners get confused. You're like, what am I selling? Okay, well, in forex market you can also make money when the market is falling. So whether the market is rising or falling, it doesn't matter, you can still make money. Now again, I really implore you to watch that video on currency pairs, because then you're going to understand that everything you're buying or selling comes in pair. Okay, if you're trading the forex market, everything comes in pair. So you're trading real countries' economies. I said that in that video. Okay, so when you sell, you're going short. This means you believe the price will go down. So again, the same example, if Euro USD was selling at 1.1000 and then the price drops to 1.0950, you've made profit if you short the market at that time. So you sell high and you buy low. Okay, now how is this even possible? Because you might be wondering, how can I sell something I don't own? Here's the secret. Forex trading works in pairs. So when you sell one currency, you're automatically buying another. So you're not just selling, you're exchanging value. Okay, again, watch that video on currency pairs, because I explained all of this in that video. Now, so you can think of it like this. If you know the price of a phone will increase tomorrow, you buy today, you sell it later, you've made profit. Then if you know the price will drop, let's say you have that phone, you can quickly sell it before it drops or even drops lower. You can sell it and buy it again at a cheaper price, but you've made profit. So that's exactly how the forex market works. So how do you know when to buy or sell? Here is a simple guide. You buy when the market is in an uptrend, price is making higher highs, and you sell when the market is in a downtrend, price is making lower lows. That is just the foundation of trading. You need to understand the trends in the market. There's a saying that the trend is your friend. And here are common beginners' mistakes to avoid. Avoid them at all costs. Buying randomly without analysis. What is analysis? We have different kind of analysis. We have technical analysis, which is data from previous years represented by candlesticks in the market. I'm going to cover a video on the anatomy of candlesticks so you understand what candlesticks are, because it is important for you to be able to read the market properly. Okay, so we have technical analysis, we have fundamental analysis. Like I told you, when you're trading the forex market, you're trading real countries economy, so you need to stay updated. You need to know what is going on. There are TV stations like Bloomberg's that you use to listen to news and all of that. That's the financial news station, so you know what is going on in the world. We have a website where we go to check news. You can also check social media and all of that to get updates on what is going on in the world. So when you buy randomly without analysis, you can just wake up and buy oil, and maybe there was a news last night about a oil producing state that war broke out in. There will be reactions in the market. So if you just go into the market blindly without knowing, without having any information about what is going on currently, you're going to be in the wrong side of the market. So also selling just because price is falling. So just because price is falling doesn't mean you should fall with it. Okay, you have to check specific points to enter the market, and timing is very important when you're about to enter the market. So also now understanding trend directions and entry late after big moves. Let's say there's news in the market and there's a lot of reaction in the market. Don't just buy because you see the candlestick moving, price is buying, so you just jump with it. You're going to become liquidity in the market. So smart traders always ask, is the market trending up or down? You need to understand the trend of the market. Again, the trend is your friend. This leads to one circle. When beginners don't know when to enter the market, they enter a market, they are running at a loss, there's confusion and chaos, and they repeat. So to break this circle, you need structure and you need discipline. You need to know what you're doing. You need to know when to enter and when to exit the market, so you don't just jump into a trade just because the market looks good or looks like it's buying. Okay, so let's talk about trading psychology. Now, buying and selling is not just technical. I just talked about different type of analysis. It's not just about technical analysis where you talk about breaking structures, you talk about higher highs, higher lows, trend of the market and all of that. It is also psychological. So when price is rising, most beginners feel safe, that oh, market is mine, I want to buy with it. But oftentimes it's already too late. And when price is falling, fear takes over. They sell at the worst time possible. They are panicking. There's chaos. There's confusion. They start opening many positions because they don't have structure. They don't have anything they are looking for in the market. They don't know when to buy. They don't know precision. They just enter randomly because a candlestick is printing green or a candlestick is printing red. Okay, fear takes over and everything is just chaotic. Before you know, the account is blown. So professional traders do the opposite. They buy with logic, they sell with confirmation, and they don't trade with emotions. Okay, you want to trade like you're a robot, like you're a machine. Emotions doesn't do well with trading. Okay, so when you know what you're doing in the market, you wait for your setup and you take the trade when it's time. You wait. Okay, patience is important in the market. So this is like a simple strategy for beginners. If you're just starting, you can just follow this simple rule. Identify the trend first. If the market is trading higher, you look for buy opportunities. If the market is trading lower, you look for sell opportunities. Then you wait for a pullback and you enter in the direction of the trend. This alone can automatically improve your results. Okay, so now that you understand the difference between buying and selling and how long and short positions actually work, the next step is we're going to learn how to identify trends and entry points with precision. If you found value in this video, like, subscribe, also comment, buy and sell, and let me know if there's any video you'd like me to do. Okay, thank you guys. Peace out. See you in the next.